turning to the advisory, and recently CLAS, which is a unit of Hub24, put out its State of the SMSF Market Report. So here to discuss it all with me is Tim Steele, who is the CEO of CLAS. Tim, welcome. Nice to see you.
Thank you, Nadine. Great to be here.
Easiest first question, what is the state of SMSFs?
Oh, look, I have to say it's in a really positive state, and we judge that in part by the recent growth we've seen. So we've looked at our data as well as ATO data, and we had the strongest year in 8 years in FY25, with the sector growing by almost 42,000 establishments, which is a really significant uplift on the year before, 27% stronger growth. So I've got to say the sector is in really good shape.
Yeah, well, a lot of our viewers are, SMSF investors, so it's right on the money for us. What is so attractive about SMSFs? What's attracting new money into them?
Well, it's interesting. We, again, from a CLAS, look at the establishment data, the demographics. So we're seeing millennials are driving a lot of this growth, and we combine Gen X and millennials. They're responsible for 86, almost 87% of all new establishments in FY25. And so our view is that they're looking at self-managed super funds as a way of taking control of their superannuation, which is going to be one of the most material assets they happen to own. So
that's exciting for the industry. However, are there risks as well? Because you get younger people perhaps that aren't as in tune on a day-to-day basis with what's going on in the market, only by default. They might have young children, they might be in university. There's a lot of responsibility that comes along with managing an SMSF, including audits and all the rest of it. Is there any concern amongst the industry that perhaps the younger cohort could get caught out at certain points?
I think it's always important to understand that SMSFs aren't for everyone, so you've got to understand what your obligations are. Absolutely, there are obligations, including an annual audit, as you referenced. Our data shows that people aren't just jumping into this for a short-term strategy. There's very little buyer's remorse from our data. So we looked at, obviously, the longevity as funds as well, and less than 7%, or 7% there are winding up in the first 5 years, and more than 75% have been held for 10 years or more. So I think there is certainly some concern, as there should always be, that people are getting into SMSFs for the right reason, investing in the right asset classes and taking a diversified approach to long-term retirement. But certainly our data is showing that they're not just jumping in and then getting out.
Okay, interesting. Division 296.
Yeah.
Boy, we've talked about Division 296 a lot. How does that show up in your research? I mean, is that seen as a broad negative?
Oh, look, we just look at the data in terms of who do we think will be affected. It's the second year we've looked at it. We looked at it last year based on FY23 returns. We've looked at it again this year based on FY24 returns, because that's a more significant sample size for us, and it is going to have a material impact. For us, it was affecting about 18,200 members with an average tax burden of around $52,000. And the really interesting data point, I know I'm throwing out a lot of numbers, Nadine, but it's in aggregate, it was $941 million impact for all the members that we identified as being potentially affected by Div 296 were it to have be legislated based on FY24 data.
Okay, now what does the data show you about asset classes within SMSFs and where a lot of the faith is being placed?
Oh, look, property remains a very popular asset class, you'd imagine, as are obviously domestic shares or equities as the most popular class. Property is the second most popular in terms of the total value. It's a really interesting area of focus. About 30% of the SMSFs held in class have property in the fund, and so it remains a really popular asset class. We continue to see ETFs become increasingly popular. It was the most popular growth in asset class last year, and again very popular this year.
Yeah, well, we just recently did a property virtual investor event, and we were talking a lot about property and SMSFs, and it looks there as if commercial property is quite popular as well.
It is. We have a split, so I said in aggregate about 30%. That's split almost exactly 50-50 based on the funds that are administered on class. What's interesting is we look at the average balance of a fund that holds a commercial property is about $3 million, and the average balance for those that hold a residential property is about $1.3, $1.4 million. The other interesting stat for us is we looked at limited recourse borrowing arrangements, and 92% of those were for residential properties based on, again, the funds on class.
Interesting. Now, accountants, they also weigh in here. What kind of feedback are you getting from accountants?
Accountants play such a critical role in supporting clients, certainly in terms of administration of funds. They are our clients, And they're demanding more from us and other technology providers to drive the efficiency they need. They are in a resource-constrained market, and so they need to be able to continue to drive improved efficiency and productivity across their team. Property is one of the themes where we've seen a lot of area of interest because the ATO is increasingly looking at ensuring that all SMSFs have appropriate, timely and accurate valuations. And so we've sought to ensure that we've built into our app at least the functionality to enable them to do that far more efficiently.
Yeah, so Class can help accountants do better work. Was there a question in there specifically about AI, or how are you using AI?
No, and look, we have been using AI, so it's our work is based purely on the data, anonymised data of the funds on Class. So we're not actually out there researching our clients, but we get a lot of anecdotal feedback from our clients. We just had our client event last week and had the opportunity to hear directly from them, and they're absolutely chomping at the bit to see how AI will help them drive greater efficiencies. Every single firm is wondering, how do they adopt it? Where does it make sense? We have been using machine learning and AI in our solutions for some time, and it's an increasing area of focus for us, particularly as we think about how do we drive enhanced reporting and opportunities for them to streamline their efficiencies.